Next up, we're going to talk about Mondi. It's a dual listed on the JSE and on the London Stock Exchange and has been a top performing big cap stock. It owns timber and manufactures pulp, paper, corrugated packaging, industrial bags and coatings. It has a market cap of 125 billion rand, a price to earnings ratio of 12.4 and a dividend yield of 3%. So these guys have, done fantastically well. I mean, I was surprised how a packaging business, it sounds pretty boring, not reinventing the wheel at all, has managed to do so well. Part of it is their sort of business model of doing quite a lot of manufacturing in the likes of Russia and so on, and selling it into, a sort of recovering type Europe and UK environment.
Definitely. While it is, people will compare Mondi to almost say it's a commodity play because they're obviously affected by paper prices, which are commoditized as well. But it's essentially a discretionary consumer income play as well. So when you see rising incomes, people buy more things, they need more packaging, and when economies are strong, they do well. That said, it is a fairly cyclical industry, but Mondi, if you look at Mondi's history, they've done well throughout the cycle, which is really an exception, and it just points to their ability to control their costs, the quality of the management of the company as well, and that for us makes it a buy. You look at it, you're also on a forward PE, you're looking at probably about 11.5, to next earnings. So it's looking very, very cheap as well. I don't know what else we can say about Mondi. It's a boring. It's not an exciting company, but looking at, I suppose, in the context of Brexit, it's obviously got the European exposure, but it's again one of those stocks that I think the market is misunderstanding, because as the general market sells off, people look at Mondi, they say, oh, that's a European company, we should be selling it. When in reality, a lot of paper prices are actually set in dollars. So I think it's about 46% of their debt is euro based, obviously because their operations are there. So with the euro also weakening and the dollar appreciating, that's actually a good thing for Mondi, because their costs are coming down, their debt is actually getting smaller in dollar terms, and they're selling in dollars, which if you look at sort of kraft paper line prices, that's actually the market's been fairly supportive, and they've managed to push through good cost increases as well. So overall, Mondi, I think, again, coming off hard. So coming off from sort of 280 almost down to.
Well, let's actually look at that share price so we can see. But that's a very interesting point that you make, and that certainly helpful that their euro debt is pulled back. I guess where you could say there is an element of excitement with this business is they managed to avoid the sort of fine coat paper, magazines, people reading less magazines because they're on the internet and so on, and they're more in the boxing and packaging, Amazon boxes and so on, people ordering stuff online. So on the back of that little bit of excitement in the packaging world, are you hot or not?
Yeah, definitely. I think you can be hot on this one. I think this one's one that is misunderstood at the moment. And you saw the pullback there. I think you can probably pick up Mondi now below 260. I think that's an amazing discount to a stock that's already cheap. With everyone else panicking, if you can hold your head, if you do have cash available to go in at this level, I think you'll see a quick recovery back to 300, and there's fast money to be made here, I think.
So it's an attractive multiple for an historically very well managed business that's done well. So I'm also going to remain hot on Mondi.